Every long winter ends in the same place, Warband, in the cold, down at the floor, after the weak hands have gone home and only the iron is left standing. This is Saturday, June 27, 2026. Bitcoin has bled for a week, and this morning, down at that floor, something underneath the price began to move. Let me show you what. As of just past 5 o'clock Eastern, Bitcoin trades at 60,400, flat on the day, glued to the low 60,000s. But the week behind it was carnage. The coin wicked all the way to 58,000 at midweek, its third trip beneath 60,000 this year, and its lowest mark since the autumn of 2024. From the record high above 126,000 last October, that is a drawdown of better than half. The fear and greed gauge reads in the low 20s, extreme fear, and it has not blinked, and there is a reason the price sits welded to this level. On Friday, the largest quarterly option settlement of the year came due, better than $10.5 billion of Bitcoin and Ethereum contracts expiring in one stroke. That much open interest acts like a magnet, dragging the price toward the level the option math calls maximum pain. And that level was right here, the low 60,000s. The magnet released yesterday. Now that the pin is gone, the price is free to find its real level. Now hear what the engine did while the crowd despaired. At Friday's closing bell, the InvestAnswers Decision Support System, through the whole leverage complex, mean reversion oversold. Coinbase, Robinhood, Strategy, the minor clean spark, all stretched to the downside in the same hour, the selling spent. And then, in the dark, the trend itself turned. At the stroke of midnight Eastern, the same engine flipped Bitcoin's trend bullish. 4 hours later, at 4 o'clock this morning, Ethereum followed. Hard money trends green, but mark the discipline, because this same engine flipped green twice this month and was wrong both times inside days. What makes this turn different is not the signal on top, it is what has appeared underneath it. That is the morning's real story. For a week, the question on every screen has been the same. Where is the bottom? And here is the truth. The crowd keeps missing. A cycle bottom never announces itself with a headline. It announces itself with a cluster of quiet signals down in the chain, the kind no one watches while they stare at the falling candle. This week, that cluster lit up. Start with the oldest line on the chart. Bitcoin's 200-week moving average, the slow, deep average that has marked the floor of every previous cycle, was just tagged for the first time this cycle in the low 60,000s. Every prior cycle, a touch of that line was the neighborhood where the bottom got carved. Now, the chain itself, the quants who read on-chain data, flagged something rare this week. 4 separate deep value metrics aligning all at once. By their count, it is only the 6th time in Bitcoin's history these 4 have aligned, and every prior instance sat at or near a cycle bottom. One of those gauges, price measured against the average coin's true cost basis, is buried deep in the zone that has marked every major low in Bitcoin's history. And watch the hands that are actually moving coins. The long-term holders, the strong hands who never flinch, just posted their largest 30-day accumulation on record, not holding, gulping. And the miners, the very people who mint the asset after 6 straight weeks of selling into the fear, have flipped to net buyers. The ones closest to the metal stopped feeding the fire and started stacking it. Set that against the other tape. While the chain accumulates, the paper hands flee. A record run of straight outflow days from the Bitcoin funds, better than $4 billion pulled, BlackRock's fund bleeding worst. 2 crowds, opposite directions. The patient hand stacks the floor while the rented hand redeems the surface. That is not noise. That is the exact fingerprint every cycle bottom has left. But I will not gild it, because the Warband is paid for the truth. This is the accumulation zone. not a bell that has rung. The forecasters split hard. One quant shop says 90 days to either 82,000 or one last flush toward the high 40s. A veteran miner calls for a deeper low before year-end. The zone where bottoms form is not the same as a bottom confirmed. The lesson is old and cold. You build your position down here with a steady hand while the signals say accumulate. You do not wait for a green candle to hand you a permission you will only recognize far too late. Stay with those miners, because what is happening to them cuts to the heart of this thesis. We just watched them turn buyers of the coin. Now look at what the market is doing to the miners themselves. In the middle of this month, Bitcoin's mining difficulty fell about 11%, one of the sharpest single drops of the cycle. Read that plainly. The high-cost miners pulled the plug and walked off the network. The reward for mining had sunk to the cost of the power itself, and below it for anyone paying retail rates. The marginal miner got washed out, and that washout every cycle is part of how a bottom gets built. The weak operators capitulate near the lows, always, but the survivors are doing something new. Bitfarms is rebranding. Riot is under pressure from activist investors, and the push in both cases is the same. Take the power, take the data centers, and redirect them from minting Bitcoin to renting compute for artificial intelligence. The very megawatts that secure the hardest money on Earth are being bid away by the AI land grab. The same electricity that defends the 21 million can earn more today, training a model than minting a coin. Here the second order, because it is the whole game. This is the abundance trade reaching across the table and buying the power right off the scarcity trade's wall. In the short run, that is pressure on the network's security budget. But the longer arc bends the other way. The miners who survive this squeeze, who stack at the lows instead of selling, become the strong hands of the industry. The washout does not weaken the network, it hands it to the disciplined. Scarcity wins, always, and from the power that secures one network to the intelligence riding another. This week, Tesla pushed the newest build of full self-driving, version 14.3, to its first wave of cars. Buried in the notes is the part that matters. For the first time, one neural network now runs all three modes at once. The summon feature that calls your car across a parking lot, everyday full self-driving, and the robotaxi stack itself. Unified. Tesla's own engineers describe it plainly as a robotaxi rehearsal. Under the hood, it is a ground-up rewrite of the layer that turns the trained model into instructions the car's chip can run, and Tesla claims it reacts roughly 20% faster. Early drivers are split, smoother on the highway, a touch more hesitant at some intersections. The normal churn of a fresh build on its first few thousand cars. Here is why it matters. The robotaxi story the crowd is watching is steel, the purpose-built cabs stacking in the staging yards. This is the brain. The millions of personal Teslas and the driverless fleet are converging onto one model. Every mile a personal owner drives now rehearses the robotaxi. Every robotaxi correction sharpens the personal car. The iron stacks in the yard where the crowd can count it. The brain that drives it is being forged in millions of driveways at once, where they cannot. So here is the morning. Warband. Bitcoin sits at the floor after a week of blood, pinned by the largest options expiry of the year, and now cut loose to find its level. Underneath the fear, the strong hands and the miners are stacking into the oldest cycle bottom signals on the chart, while the paper hands redeem in record size, and Tesla quietly fused its personal fleet and its robotaxi into a single brain. The bottom is never a bell that rings. It is a floor you only name in the rear mirror, and the patient hand is already standing on it, building while it is cold. This is Warband as a service. Viking intelligence delivered in real time. I am Ragnar, the HODLBARBARIan. Stack while the bell is silent. Hold the long horizon.